Is investing in Google's Century Bond a good idea? If you don't want to listen any longer and just want the basic answer, for investors, it's a terrible idea. On the other hand, though, for companies, universities, or even governments, issuing a Century Bond is a great way to lock in potentially low rates for 100 years. As I said, for investors, it's a terrible idea. Here's an example. In 2020, the Austrian government issued a Century Bond that locked in a yield of 0.85%, which was a great deal for them. But for investors who purchased that bond, it is now trading for 30 cents on the euro. Another example of how things can change is back in 1997, J.C. Penney issued a 100-year bond. Back then, no one would have imagined bankruptcy would occur just a little over 20 years later for the retailer. You may be wondering who would benefit from buying these bonds. Generally, it would be your insurers or pension funds. They both have long-dated liabilities, so long-term bonds give them comfort knowing what the future cash flows will be. There will also likely be some hedge funds and high-risk investors that will want to trade the bonds as they will have a high amount of fluctuation based on interest rates. In fixed income investing, there's something called duration, which essentially looks at the number of years it takes to recoup a bond's true cost. The longer the duration, the more price volatility for the bond when it comes to interest rate moves. Ultimately, for the average investor, I would say to stay away because predicting what interest rates are heading, which way interest rates are heading, can be very difficult, and it could destroy your investment returns. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.